Assalamualaikum and hi everyone. This is the MFRS116 Property Plan and Equipment session, and in this session, learning session, we are going to learn part D of this journey, which is to learn subsequent measurement and accounting for depreciation. And this is the first part of the video for part D, and please do watch the remaining parts that will follow. Yeah, so let's start with a subsequent measurement and accounting for depreciation, and this is actually the lesson outcome for this part D, which is to explain accounting treatment and subsequent measurement of property, plant and equipment under two model, which is the option and MFRS 116 cost model and revaluation model. And in part D as well, we'll be learning on how to calculate depreciation expense and all the accounting treatment. So subsequent measurement, under subsequent measurement after initial recognition, meaning that after you have already recorded the PPE, yeah, for the subsequent measurement, which is measurement after the initial recognition, MFRS 116 permits entities, reporting entities, to choose between two accounting policy models under the subsequent measurement. The first one is the cost model, and you can also opt for revaluation model. And that was also the same case under Malaysian Private Entity Reporting Standards, which is the MFRS, that also provide the choice for cost model and revaluation model, right? And MFRS is actually similar to FAR210 SME, which is the one issued by the International Accounting Standards, so it's word for word the same. So subsequent measurement, we start with the cost model. Under this model, the item of property, plant and equipment will be carried at cost less accumulated depreciation and less any accumulated impairment loss. So that is best illustrated here. So if you have a cost, that cost should be deducted with accumulated depreciation and accumulated impairment loss. But for this session and for this purpose of this subject, our focus will be only on the cost and accumulated depreciation. If you are interested to watch on accumulated impairment loss, you can check my other videos under the playlist, which is intermediate, and this is under the playlist which are beginning for the beginner, right? So the traditional method for accounting for property, plant and equipment is actually the cost model, and these are some information regarding impairment loss, where it will normally happen when the net carrying amount is more than its recoverable amount. The second method is the revaluation model, and under revaluation model, the property, plant and equipment will be carried at the revalued amount, and the revalued amount is actually the fair value less subsequent accumulated depreciation and less subsequent accumulated impairment loss, which is illustrated here. So you have the fair value, some amount here that should be deducted with the subsequent accumulated depreciation. The accumulated depreciation here means the one after it has been taken into consideration, the fair value. Depreciation that follows after that, all the subsequent period depreciation will have to be deducted, as well as any subsequent accumulated impairment loss. As I said, this will not be in our discussion, so we're not going to discuss this. Next, so we start off with cost model, and as I mentioned, these are the cost model was cost minus accumulated depreciation minus accumulated impairment loss, and that is what you call carrying amount. So the result of that is called carrying amount. And let's start with the first thing that will be discussed here under cost model, that is depreciation. So for what is depreciation? It is the systematic allocation of what? Allocation of the amount of the asset, or more specifically the depreciable amount over its useful life. How does the asset is being used up over the useful life? That is called depreciation. So each year there will be a reduction to the asset, and that reduction, systematic allocation of that reduction, is what you call depreciation, and that will only be done over its estimated useful life. Depreciation is a measure of consumption, wear and tear, decline in value due to technological obsolescence, a passage of time, such as when it is used up in the operation or in the ordinary course of the business, and also changes in market price. So it measures this and it is reflected in the calculation. Next is that this only applies to the depreciable asset, and these are the characteristics of depreciable asset. Asset should be more than 1 year. Here the depreciation will be charged for the PPE. Of course, it is more than 1 year or one accounting period. Limited useful life, let's say the life was just 10 years, so that is a limit to it. Held for use in production, for supply of service, supply of goods, rental to others, or for admin use. If you can see here, these are all the function or the features to be one of the item to be considered as a PPE. So meaning that it was used for the business purpose, and that was in production, supply of goods, services, rental to others, or for admin use. And when we talk about depreciation, an item that is being depreciated will be the one that is having limited useful life. Therefore, if you have an item of PPE that has unlimited useful life or indefinite useful life, that is not a depreciable asset. So depreciable asset only refers to the asset that has limited or definite useful life. And therefore, if you have a land is normally not subject to depreciation. So in a simple word, land is not depreciated, or we will not charge depreciation for land because they have indefinite useful life. And however, a building that is located in the land, a building that was located on a freehold land is still subject to depreciation. So the land is not depreciated, but the building on that land is a depreciable asset, so it will be depreciated. These are the factors that will govern the depreciation, because depreciation is an expense to the company. So 3 factors that govern depreciation are depreciable amount, estimated useful life, and what are the allocation method. So for the first one, depreciable amount is actually the cost less the residual value. So cost here refers to the cost that we have discussed in our previous video, which is the cost of the PPE. Yeah, it can also be the revalued amount. We'll touch on that later when we cover the revaluation model. And what is residual value? It is actually the amount that is expected to be received from the disposal after deducting estimated cost of disposal. So this one is the theoretical part of it. Our focus will be mostly on the computation part. And estimated useful life is the period that is expected where the asset will be available for use by the entity. And estimated useful life can be in number of years, can also be in number of production, or maybe number of production units that are expected to be obtained from the asset. Let's say for a machine, how many units will be able to be produced in maximum. That can also be used as the useful life. Allocation method, depreciation should reflect the pattern in which the property, plant and equipment's future economic benefits are expected to be consumed by the entity. The way you allocate that depreciable amount over the estimated useful life should reflect the pattern, how it is being consumed. So let us look at the example of depreciable amount. Let's say the cost of property, plant and equipment is 100,000 and the estimated residual value is 20,000. So earlier on in the previous part, I've mentioned that depreciable amount is cost minus residual value. So in this case, the 100,000 minus 20,000 is the depreciable amount. So depreciable amount will be used for the straight line method. So we're going to use this as a basis to calculate depreciation under the straight line method. And before we look into the method, there are some factors that will affect the useful life. Physical factors, you can read this, technological factors, economic factors, and also legal factors, whether or not there is some rights or limited period that are a policy of a particular country, for example, that can also affect the useful life. Okay, let us look at when will the depreciation start. So the start date of the depreciation is normally when the asset is available for use, meaning that it is ready for its intended working condition, intended purpose. So in the location and its condition which is already fit and necessary to be capable of operating in the manner intended by the management. So there you will start provide your depreciation. There are two methods that will be discussed in the videos, even though there are many other methods, two more methods. Yeah, there are production units method, there are also sum of digits method, but in this particular session of particular subject, we just be discussing two methods. The first one is the straight line method, and the second one is the reducing balance method. We'll start with the straight line method. Under the straight line method, a same amount of depreciation charge or expense, there will be some figures here later, will be the charge over the useful life of the same property, plant and equipment. So if you have bought one particular asset, the depreciation of that particular asset, if you use straight line method, it will be the same throughout the useful life. And this assumes that the asset is used up evenly over the useful life. The way you consume the asset are assumed to be even, right? And therefore it was allocated evenly for each accounting period or each reporting period over the useful life. So it was evenly allocated, right? Okay, next. This method is normally appropriate when benefits to be derived from the asset are expected to be uniform. So if you think that you will use up the asset uniformly throughout the estimated useful life, so this method is appropriate. However, accounting policy is also decided by the management. So management will decide which method which is suitable for a particular asset. There are two formulas to calculate depreciation expense under straight line method. The first one is where we take the cost minus residual value divided by useful life. The second one, and other terms for useful life, if you come across residual value, sometimes it is salvage value or scrap value. For the second formula, that will be depreciation percentage. There will be normally a rate given multiplied by the depreciable amount. Recall depreciable amount is cost minus residual value. So depreciable amount is not just cost, but if you have any residual value, that will be also deducted. This is only true for straight line method. So the second method is reducing balance method, where under this method you will see a decreasing depreciation charge or a diminishing charge over the useful life. So what happened is the asset will be allocated proportionately, or depreciation will be provided proportionately more to the earlier years as compared to the later years. So let's say you provide in the earlier years 30,000, the following years will be a reducing amount. That's why it is called reducing balance. So the more depreciation in the earlier years, let's say you have a 10 years period, so more will be here and towards the end it will be less. Right, so that was over the estimated useful life. You assume that the asset or maybe the machine or the motor vehicle will be consumed efficiently or used up faster in the earlier years, and it will be less of usage in the later years. Under reducing balance method, depreciation is calculated as follows, where you're going to see that depreciation will be taken, there will be a rate that will be given. Rate is normally determined, and this is normally the rate, and that will be multiplied with the cost minus accumulated depreciation. And for your information, the cost minus accumulated depreciation is known as carrying amount or carrying value. Also, that is actually the net carrying amount or net carrying value. This is for the first calculation for the reducing balance method. However, for the first year, you would see that depreciation is still based on cost if it's for the first year. Because in the first year, you just start your depreciation and there are no accumulated depreciation for the first year. In the second and subsequent year, yes, it would be on net carrying amount. This is for second and subsequent year. Let's say for 10 years, second year, third year, until the year 10, it would be based on carrying amount. But on the first year, somewhere in the first year, it would be just on cost. Yeah, nothing to do with accumulated depreciation for the first year of acquisition. Next, how do we calculate depreciation under straight line method? We'll go on with this example A for straight line method, and we're now starting with the basis, which is yearly basis. Example A, 6th of June, this is the date of acquisition. The VW bought a motor vehicle, invoice price, or the purchase price, or the lease price, or the supplier price was 180,000. And they receive a rebate needs to be deducted, yeah, and there is a registration fee of 300, and this is the insurance and road tax for the first time incurred for the motor vehicle, so that will be capitalized. And there is an estimated life of the asset, which is 5 years, and asset will be depreciated on cost. On cost, that means straight line method, SLM. And yearly basis. Yearly basis means regardless when you buy the asset during the year, you will still charge full year depreciation. If you look, the year end here is 31st of December, and 31st of December is the closing date. How you are asked to calculate depreciation for 3 years after which is in the first year of acquisition, and then the second and the third year. So let's see, how do we calculate that? Before we calculate the depreciation, you first need to calculate the initial cost. The initial cost will be taking the purchase price less the rebate. If you can recall, there was a registration fees and insurance and road tax for the first time. Total initial cost was 179,500. But if you recall, there are also there are no other expense which involve except for capital expenditure. Okay, so after you calculated the initial cost, your second step is to determine the depreciable amount. Remember, depreciable amount is cost minus residual value. So this is the cost. Residual value in this question is not given. So if you can check, it is not given here. No information. But we just need to make a checklist that we have checked all the items. So minus 0 because no residual value. And in this case, depreciable amount equal the cost because no residual value. Next is the calculation. So how do you calculate depreciation charges? First, you need to do some kind of extraction of information from the question. So if you look, the company depreciation policy is to depreciate the motor vehicle on cost from the information in the question, yearly basis. On cost, that means that depreciation is calculated using the straight line method. So that word cost here refers to straight line method. And a yearly basis, it means that for the year ended 31st December 2006, which is the first year, remember it was acquired 6th of June, yeah, you are going to charge depreciation for 1 year regardless the month of ownership. Even though the ownership was less than a year, right, you still need to charge a full year depreciation. Why? The basis is yearly basis. Let's look at the calculation for the first year. So you'll take the depreciable amount. Remember, depreciable amount was here. This is the depreciable amount, and that would be multiplied with we are using the first formula, so divided by the 5 years. 5 years is the useful life, so you can write down here expected useful life is 5 years. So this is the useful life, which is the expected useful life, and since you charge full year depreciation, you will multiply by 1 year. So that was the first year depreciation, 35,900. In the second year, it would be the same, because remember earlier the theoretical part that I have explained, the depreciation is the same for the asset if it follows straight line method. Same goes for the third year, assuming we have no other additional purchase of the same motor vehicle whatsoever. If you have, that has to be done separately, but this one is just about one particular motor vehicle, so you can see that it is evenly each year for 5 years, but this is just for 3 years, 35,900. Next is looking at how do we calculate the accumulated depreciation. So after you have calculated the depreciation, this is the expense. And at the end of the year, the accumulated depreciation would be the same, 35,900. So the next stage is to calculate the net carrying amount. Net carrying amount is again cost minus accumulated depreciation. So this is the cost and this is the accumulated depreciation. So that was the first year. In the second year, you would see that the accumulated depreciation has grown further, where you will add this together and this will give this figure, and therefore that was the accumulated depreciation last year plus depreciation this year, which is 2007. So you have 71,800, which is the one here, right? The next one is in the third year. In the third year, it would be the previous year balance, which is the 2007 balance, that will now be beginning of the year. So now you will have to add that. Total would be 107,700, and that 107,700, which is actually the accumulated depreciation for 3 years, or you can also use 35,900 times 3 because it's the same, right? So you will get the carrying amount for that year to be 71,800, and this is the one that will be recorded in the statement of profit or loss, because I put here expenses, so this one will go to the statement of profit or loss. But accumulated depreciation will be shown in the notes to the PPE. This one will be covered later, and net carrying amount is the one that will be reported in the statement of financial position as well as in the notes. That will be done later. The second one is about straight line method. The same information, exactly the same information, only that now it is using it's a different one. You have 8 August 2006. OD Berhad bought a motor vehicle. So the date is 8 of August. And remember, monthly basis means you are going to charge depreciation based on month of ownership. So this is going to take care the part of month of ownership. And you bought the price is 220, registration fees and insurance and road tax for the first time. Invoice price is the purchase price or the supplier's price. The useful life is expected to be 5 years, and there is a residual value of 8,000, and it was on cost monthly basis. You have to calculate for 3 years again, so you can check that. What is the difference? The difference in this question, you can calculate the purchase price. Here is the purchase price, 225,000, by using the purchase price plus the registration fees, and directly attributable costs are here, these two. Next, depreciable amount is cost minus residual value. Please take note that there is a residual value of 8,000, and therefore depreciable amount is no longer the same as cost. So this is the cost, which is 225,000. Next, we look at the calculation. First, extract the information. So it is monthly basis. Bear in mind, it is still on cost. Depreciation is calculated by using Straightline Method, but monthly basis, it only reflects that depreciation will be charged based on month-to-month ownership in the year of acquisition of the machine. For example, what was purchased earlier, motor vehicle, in the year of acquisition, and that will be in 2006. Monthly basis will be the case where you are going to calculate how long has the asset been with the company. So for example here, from August to 31st of December, it was 5 months. So that proportion of 5/12 will be used in the calculation, because the 1 year has 12 months. And the year ended 31st December, we'll see depreciable amount, which is 217,000 from the previous slide, divided by 5 years. And here you can see that that 5 years is actually, the 5 years here is referring to the month of ownership for that particular motor vehicle in the first year, which is year of acquisition. However, in the year that follows, the following year, 2007, it will be charged the full year. First year, you will have the proportion, but in the second year, it will be the full year depreciation, because it has been with the company more than a year already, right? And now the third year also would be the same. So the depreciation in the second and third year is the same, because Straightline Method, and it was charged for full year. However, the first year is different because the monthly basis is being adopted. That's it. I will go with the Formula 2 in my second video. Thank you for watching. I will see you when I will see you. Till then, have a pleasant day ahead, and Assalamu alaikum.